FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz, and today is 12/12/19. Well, hey, gold kind of been trading in a range. It got down to right close to 1455 or so, and bounced back up. It's still trading less than 1500, but what does that mean? I think we've just completed a leg, and we're ready for the next leg up. But let's see what David Erfle has to say. You know him well from juniorminerjunkie.com. That's junior, M-I-N-E-R junkie, J-U-N-K-Y, as opposed to J-U-N-K-I-E.com. David, welcome back. So the market's getting ready, huh?
Yeah, I think so. Thanks for having me on again, Kerry. It sure looks like it. The bullish bowling pins or the bullish gold bowling pins are lined up here to be knocked down into 2020. I mean, you got the juniors leading the minors and the minors leading the metals, which is a very bullish combination. And you also got capital markets improving. You got a lot of big bought deals announced over the past few weeks, and M&A has really picked up. We've had over $8 billion of M&A activity over the past 3.5 weeks or so, and we had another one announced today. A company that I own and that I think I've mentioned on your show before and that I cover in my newsletter, Teranga Gold, purchased Barrick's Massawa complex in Senegal, which is right next to their flagship Sabodala mine. And with this deal, Barrick's going to own 11.5% of the stock, and I would not be surprised to see Teranga become a 1 million ounce producer by 2021. So things are looking up in the sector.
Huh. Interesting. So the juniors are leading they're leading the majors now at this point?
Well, we got silver juniors leading the minors, and the minors leading the metals. So if you take a look at the SILJ and the SIL, which is the silver minor ETFs. The SILJ is the silver junior minor ETF. And that's usually a big laggard when you have a prolonged bear market, which we've had in the minors for quite some time now. But if you take a look at those charts, they've been bifurcating from the GDX and the GDXJ. They've basically been leading. So when you have silver junior miners leading the miners, and then the miners leading the metals. That's a very big bullish combination.
Right. Big bullish combination. And, you got to look, this is like the one depressed sector of the stock market for years now. Everything else has accelerated. And one other mention is that silver is the only commodity which has not seen a new high in over 40 years.
That's a great point. Yeah, I mean, silver's really, really depressed here, and I think the market's becoming aware of that. And when you have a sector, which is the mining sector, which has lagged the metals price, especially the gold price, for 20 years. Mm. I mean, miners have been lagging gold for 20 years. It's hard to believe. Especially when we had a big, huge bull market from 2001 to 2011, right in the middle of that. That's an incredible fact. I mean, you've got, like you said, everything else has gone up. I mean, the mining sector is basically the last deep value play left in the marketplace. And I've been saying that for a few years now, but it sure looks like 2020 is going to be our year. All the stars are lined up here. I think the sector's waiting for a 1550 close on a weekly basis at the gold price. Once we see a 1550 close on a weekly basis in the gold price, then I think the capital markets will really start to loosen up their purse strings down the food chain into the smaller early stage juniors. Those are still having trouble getting financed. So I think once that happens, then it's really going to start to open up the capital markets.
I'm inclined to agree. Another thing why these companies should be doing a lot better, their biggest cost is energy by far.
Right.
By far. Even if they've got great infrastructure and they're by a power line, there's still their biggest cost is the energy that it takes to get this stuff out of the ground. And whether they crunch it up and mill it or whether they heap leach it, they got to push the dirt and get it in position to have the metal extracted from it. And we've got unbelievably stable to low energy prices, which, well, you're in California, so I don't want to rub it into you. But, if I go to the gas station, regular gas is like in the low $2 range, $2.39, $2.49. And really, energy is plentiful. It's cheap. Nat gas is down, to the low $2 range and probably heading lower after a couple of bounces. So when you take all these things into account, their main cost is controlled and probably staying low for the foreseeable future. The sector really should have moved because the profits are going to be there. You look at the near-term producers, the ones who are going to be producing and who are producing now, the price that they're getting per ounce is higher and the cost of production is lower. I mean, in any normal industry, David, that would be a recipe for higher stock prices.
FSN Radio. It's all about what's next.
Financial Survival Network is brought to you today by Oren Resources, a junior exploration company with the appetite of a major. It's hot on the trail of the next globally significant discovery, creating enormous potential upside for you, the shareholder. Oren is one of the most aggressive exploration companies pursuing high-grade, scalable gold and copper deposits and has a premier 7-project portfolio, including its 2 flagships, Committee Bay in the Arctic and Sombrero in Peru. Oren's unparalleled technical team and highly experienced management has a history of success in advancing and monetizing exploration assets. No wonder Oren's been called one of the best in the junior exploration sector. Oren trades on the TSX and the NYSE under AUG. To learn more, go to orenresources.com. That's AURYN resources.com.
The Financial Survival Network. It's all about what's next.
Yeah, I couldn't agree more. And you also can throw in there that these majors have really cleaned up their balance sheets. And also, if you're looking at Canada, where there's a lot of these deposits are being proved up right now, big deposits with blue sky potential, their currency is very, very low. Yeah, so if you add the fact of cheap energy and a really low Canadian dollar, these Canadian deposits that are being proved up are looking very attractive right now.
Yeah. Canada, I'm bullish on because the broad economy in Canada also is very negative and labor costs probably heading down. All costs are heading down because right now the loonie is at 76 cents, US dollar, 76 cents per loonie. So there's another way of saying it. I don't remember the reciprocal value of the currency right now, but when all of your costs are in Canadian dollars and those costs are going down, then for a U.S. investor, the U.S. price of gold has gone up. So it's another added bang that you can play as partly a currency play because, look, a lot of these stocks, David, are listed on the on the venture exchange. So, they're Canadian listed companies. So as the price goes down or as the loonie goes down, your ability to buy more of the stocks goes up.
Absolutely. I couldn't agree more. Yeah, it's looking very bullish here into 2020 for the miners, sure.
Yeah. So in any event, what companies do you particularly like?
Well, I mentioned Teranga, and as far as takeover candidates, which is what people should be looking at right now because the M&A has heated up. There's 2 that I really like that I've mentioned in the past, and they're both in Canada. The first one is Marathon Gold, and the second one is West Dome Gold Mines. West Dome Gold Mines is already a producer, and Marathon Gold is proving up a deposit in Labrador that's already 5 million ounces and getting bigger. And I wouldn't be surprised if both of these companies get taken out within the next 12 months.
Yeah, well, like you said, the M&A is picking up, and at these prices, it's a lot cheaper for the companies to just go buy the company than it is to develop their own reserves, because every major and even the medium size miners are all scrambling to increase their reserves.
Right. Yeah. And they canceled their exploration programs back during the bear market, when they had to do everything they could to squeeze an ounce of gold out of the ground at a profit, as the gold price was going from $1,900 down to nearly $1,000 an ounce. So the only way to pretty much increase your reserve ounces economically is on Bay Street, as opposed to trying to get them out of the ground yourself. And a lot of these juniors now are starting to look attractive here. They haven't really started to go down the M&A food chain yet. These are happening with big projects right now, but the littler projects I expect are beginning to be taken out as well. When these companies look down the food chain and see, hey, like this company looks really attractive. It looks like they probably have a lot of blue sky in this project. We should take it over before it gets too expensive. Once you start to see the mad dash and that takes over, then it's really going to start to heat up.
Yeah. And once we see the price of ounces in the ground go up, the opportunity will have been missed, but that won't stop them from buying more and more, even at higher prices. In fact, they view the higher prices almost as validation that they're doing the right thing, rather than, hey, maybe we're paying too much for this stuff.
Right. Yeah. And this time around, they were smart about it. The last time around, they waited till the peak of the bull market, and they started to buy. They started to buy these uneconomic large deposits with their shares, and so they diluted their shareholders to buy large uneconomic deposits. Well, this time around, they started to do strategic financings in the companies that look attractive. So when they go to take them over, they already own 10 or 20% of the company.
Yeah.
So they don't have to pay as much.
And they know what's there because they're insiders. And yeah, they've gotten wiser for sure. So a lot of talk went into the Newmont Barrick joint venture in Nevada. You and I saw it firsthand. What repercussions, what shockwaves are still happening in the sector because of that?
Well, I mean, it's not really a surprise that both Newmont and Barrick are starting to divest these assets. When they made their takeovers, when Barrick took over Randgold, and then when Newmont took over Goldcorp, they announced to the market that they were going to be divesting some projects. And also, the CEO of Barrick, the new CEO of Barrick, Mark Bristow, who is a trendsetter in the sector, he's the one that kicked off this latest M&A spree on November 17th, when they announced the Kilgore sale of $750 million. So he's been adamant about basically saying, "Hey, look, we don't want to own assets that we don't own 100% of, or that is not going to produce at least 500,000 ounces a year for at least 10 years." And he's been true to his word. He's starting to divest these assets. So I think this is going to continue.
So there's definitely opportunity out there, but then again, we've lost the greater fool in the market. A lot of this M&A activity in the sector relied on the greater fool, or the greater fools, of which there were three of them basically, who would buy up just about anything if it looked somewhat promising. One of the most amazing things, David, is when you look at these projects and you see the title, and you'll see like 10 or 15 different changes in ownership for what probably is a viable project, but nobody ever got it together to actually, start mining it, start exploiting it. It's really kind of shocking when you see that. It's think of any house in California. It hasn't been flipped as many times, anywhere near as many times as these mining projects have.
Yeah, that's a good point. And also, you got to think about where the gold price was when this was happening. They might have taken them over when the gold price was a lot lower than the project was to be economic. So they thought, well, wait a minute, gold's probably going to go up. So by the time we prove up something here, the gold price will be in an area where this project will be economic. That didn't happen. The bear market lasted longer than they thought. They ran out of money, and then the project got passed to somebody else. So once we have a solid $1,500 floor, a lot of these projects that were left for dead are going to start to become economic.
Yeah, I think you're right. And another thing noticed with the majors and some of the mid-tier group as well, they don't have to go through all of the hurdles of, preliminary feasibility studies and all of this. They can actually, besides the environmental review, once they decide on a project and they allocate the capital, they can just do it. They don't have to get caught up in all these financings and everything else. So it makes a lot of sense for them to line up a portfolio of miners, of rather exploration companies that, they can own 10, 15% of with managements that they trust. Effectively, they've subcontracted out their exploration function.
Right. That's a great point. And, you're starting to see that this is starting to take place with a lot of these juniors. And it's funny because when it starts to happen, there a lot of them could be sitting on the fence. And I say, well, we'll look at this big deal that just took place. We were looking at that, and this company's already taken it over. Well, we better buy that other one that looked attractive before somebody else does, and then it just starts off a chain reaction. Yeah. And once the gold price has that solid $1,500 floor, I really think it's going to start to get exciting.
Yep, and I think we're going to be there very quickly, more quickly than most of you out there are anticipating. That's why time to buy this sector is when it's depressed, not when it's gone up 50% or more, because then you're getting close to the peak 50%. That's on average. But when these stocks go up, they go up many multiples. And you and I have seen it both. Numerous companies just taken off for the stratosphere. Hey, all right. So we got this interesting trend heading for 2020. 2020 should be the year that you don't have to look back when we hit 2021 with 2020 hindsight and say, I shoulda, coulda, woulda. It's probably the year that it makes sense to start gradually allocating some capital, not risking it all, but really looking at the projects that have the most potential with the least risk. Anyway, make sure you go take a look at David's site. Just tell us again the site, David.
That's juniorminerjunkie with a y.com. And I also have a weekly column on Kitco, comes out every Friday. You can find me there.
All right. Excellent. Hey, and we'll have a link to your site. It's in the show notes right now. And questions or comments for David, myself, just email us kl@kerrylutz.com, Twitter feed @KerryLutz. Facebook page is Financial Survival Network. We'll start updating it a little more. We've kind of been preoccupied. Of course, the website, financialsurvivalnetwork.com. Feel free to sign up for our newsletter. We got one going out shortly this week. David, pleasure. We'll talk to you again soon. See you in Vancouver.
Okay, looking forward to it, Kerry. Always great to talk to you. Thanks for having me on.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.